Two negatives really are that the US is still struggling to avoid the fiscal cliff, and you also have the Europe cut its growth outlook. But on the other side, if you look at the economic numbers that have been flowing in from Germany or China or US have been on the positive side, and that really seems to be supporting or keeping some cap to much of losses in most of those commodities. The turnaround today has come in case of the crude prices. After 5 days of decline, you have seen some run up come into that space. While there are lots of fundamentals which are still weighing onto the space in sense of the US inventories which are at 8-month highs. You also have concerns coming in because of the Italy leadership change, and you also are looking at the point that the heating oil has declined to 4-month lows. So while these factors are putting pressure onto the prices, you also are looking at the Chinese strong numbers and the economic numbers telling you that the consumption really could be increasing in many of those other developing nations. If you look at the precious metal space there, you have seen a bit of a decline coming in for that one. Gold has been gaining much of the past week, but today you have seen some profit taking coming in for that. But it is the FOMC meeting starting today for 2 days, and the announcement expected that there could be more quantitative easing coming in. It's something that is keeping that space also above 1700 in the international markets. A bit of a profit taking is what you are looking at the base metal sector as well, where copper prices are off their 2-month highs, and you have seen a similar profit taking happen in case of zinc, lead and nickel as well.
Amar Singh Deo, head commodities and currencies at Aditya Birla Money Limited, joins in live with his midday commodity trading ideas. Afternoon, Amar, your call on precious metals like gold.
We have been seeing, I would say, consolidation in gold prices with gold prices taking support at lower levels on the international side. The fiscal cliff issue still remains supportive for gold because that still has to be resolved. So that's one that's supporting gold, and also you have the FOMC statements coming in tomorrow. So that also basically it would be in line with expectations that the stimulus packages and the government economic plans would continue the way it is from the US perspective. So that's been supportive for gold prices. But gold, if you look at gold from a medium term perspective, gold prices are in a consolidation phase. From an intraday trading perspective, one can go short in gold at 31,380 with a stop loss of 31,470, targeting 31,300 levels, 250-300 levels.
Right, and what about your views on copper?
Talking about, I would say copper in particular, copper amongst the base metals has really outperformed, and it is at its highest in 2 months. I would say a major factor would be the Chinese. If you look at the import figures, that's up 13.5% in the month of November. So that's been supportive for copper prices. So copper can be looked at as a buying opportunity because the overall trend for copper definitely remains strong. So any dip should be used as a buying opportunity. From an intraday perspective, copper can be bought at 445 levels with a stop loss of 442, targeting 452, 453 levels.